Welcome to my channel Crypto Anand. In this video, I'll be talking about what to do at the present situation. The market is going down day by day. If you are a crypto investor, I know many of you have lost plenty of money in the current market situation. Many of the coins have gone down up to 90% and even 100% coins like Terra Luna. And since Bitcoin is down by 58% from its all time high, many of the altcoins have fallen down very badly. In this situation, as a crypto investor, what to do? I will suggest some ideas on what to do, whether to hold your coin or sell your coins off. We will discuss in this video. Before starting this video, I will tell you I am not a financial advisor. I am making this video only for educational purpose and entertainment purpose. Do your own research before investing in any coin. Okay, let us go into the video. Bitcoin and crypto prices are extremely volatile. What to do when they are crashing? If there's one word that describes Bitcoin and cryptocurrency, it is volatile. Crypto prices soar and then seem to crash almost as quickly, while rumors, sentiments, and fundamental developments are quickly factored into the market. Even seemingly reliable stablecoin Terra USD has plunged as concern quickly developed about its solvency, and the Treasury Department is citing the risk that cryptocurrencies could cause to the broader economy, calling for heavier regulation of them. For example, Bitcoin was skyrocketing in November 2021, hitting an all-time high of nearly $69,000. But less than 3 months later, the cryptocurrency had lost nearly half its value, plummeting to around $35,000. That volatile situation attracts traders looking to make a profit, but it's nerve-wracking, especially for new investors looking to get started. And traders can expect plenty more of this volatility in the future as new cryptocurrencies emerge and others fall by the wayside. With cryptocurrency so extremely volatile, what should investor be doing to manage the risk? Five things to do when cryptocurrencies plummet. Scared by a plunge or thrilled at the prospects of buying in cheaper. Either way, here are five things that you need to do when cryptocurrency prices crumble. Number one, stay calm. Whether you decide to sell your cryptocurrency or see a dip as an opportunity to buy more, you need to act with a cool head. Making emotional decisions, especially when trading, rarely results in anything good happening. So, before you rush into the market in a panic, you will want to reflect on why you are trading crypto in the first place. Are you investing because you believe in the long term opportunity? Or are you here to make a quick buck on short term trading? The answer to these questions can help guide you to the proper decision. In either case, you will want to act in accordance with your own goals. In other words, if you believe in long term opportunity, think with that mindset. If you are here for a quick trade, think with that mindset. Point number two, assess the situation. Is there news driving the trading price of Bitcoin and other cryptos? It's possible that there's fundamental news that shifted the market sentiment, and it's not just price action or rumor driving sentiment. In 2021, actual developments at prices. China's move to ban financial institutions from providing crypto related services was a further clampdown, since the country had already banned crypto exchanges in 2017, though it hadn't prohibited individuals from owning cryptocurrencies. Then, late in 2021, the Federal Reserve decided to reduce liquidity in the financial system, and many cryptos have been on a significant downturn into 2022. In May 2022, a stable coin Terra USD plummeted as traders engaged in an old-fashioned bank run, as the fear that it didn't have the crypto assets to back its peg to the dollar. This news spilled over into other crypto markets as traders worried that selling would beget more selling. So these moves have been further significant blows to the burgeoning market, which had been enjoying significant capital inflows. The third point, remember that volatility is the name of the game. Cryptocurrency is volatile by nature because crypto generates no cash flow. Traders have to rely on changes in the sentiment to drive the price. That means the market can swing between rabid optimism as it did in early 2021 to pessimistic despair as it did a few months later. The furor around the Coinbase IPO in 2021 helped drive positive sentiment to crypto, while the reduction in monetary stimulus drove pessimism at the end of 2021 and the start of 2022. So, when you have an asset that's driven by sentiment, the emotions of traders propel the market. That's true in the case of stocks too, but they also may have a real stream of growing cash flows from their issuing company to accelerate them higher. The volatility is exactly what draws professional traders who use high powered algorithms to make sophisticated trades, something that mom and pop traders don't typically have the advantages of using. Traders like volatility since it gives them a chance to make money. That's the Wall Street game. The fourth point, evaluate the future. Analyze how the fundamental situation could play out for crypto. Given new developments, will governments get tougher on it? Will they encourage wider adoption of it? Will new regulation help rather than hinder the cryptocurrency market? What else might drive to the market? Is China's move to ban crypto a harbinger of things to come? Maybe. India had been mulling the idea of banning cryptocurrency, while the Russian central bank has also voiced opposition to cryptocurrency too. But other countries, including the United States, are exploring how to regulate cryptocurrency instead of prohibiting it over time. A couple countries, namely El Salvador and Central African Republic, have even made it legal tender. How other major countries proceed remains to be seen, but it's clear that cryptocurrencies face a real threat in the form of regulation, including regulations that could literally put them out of business. As a crypto gains traction, its risk becoming a victim of its own success. The fifth point, determine how to act. This is the most important point. After you have done cooling down and have assessed the situation and what it means for the future, you will want to consider how to act. Are the risks really opportunities in disguise? If you see it that way, you may want to continue holding your position or use a dip in the price to invest more. Or the risk likely to persist or even grow worse? If so, you may want to take your losses now and stay out of the game for the future. Is the situation too murky? If it's tough to see the way ahead, you may consider splitting the difference, selling some of your position today while still having potential upside tomorrow. Whichever way you go, you will want an action plan that reflects your view on the potential risk and opportunities of cryptocurrencies. But it's what's nothing that some of the world's smartest investors won't touch cryptocurrencies and strongly caution you about them too. Legendary investor Charlie Munger, vice chairman of Berkshire Hathaway, said, I admire the Chinese. I think they made the correct decision, which was to simply ban them. Even Warren Buffett told few days back, I would give you only $25 if you give me the entire Bitcoin in the world. So this is what the investors in stock and other bonds think. Alternative to cryptocurrency is highly volatile and speculative, and many investors don't feel comfortable putting much, if any, money in them. The good news for investors is that they have alternative to cryptocurrencies that offer attractive long-term returns. You may consider individual stock, dividend stock, index fund, something like that. But still, since you have invested money on cryptocurrency, you have to hold your coin and wait for the right moment to take profit. Never be panic and sell off your coin, and you may have huge loss. Therefore, always staying calm and assessing the situation and market would be the better idea, and you can make huge money in the future if you do your own research. Thank you for watching this video. Please press the subscribe button and like button. Have a good day. Thank you.